everyone, and welcome back to the Night Shift. June is proving to be an extremely volatile month, and the opportunities it's creating simply cannot be ignored. As retail investors, we perform best when we capitalize on institutional blind spots that plague Wall Street. When analysts are blinded by macroeconomic fears, short-term client opinions, or fundamental misunderstandings, they create massive gaps in the market. That's exactly where we step in. By using our own research to find unshakable competitive moats and technical superiority, we can get ahead and make life-changing moves. With that in mind, today I'm sharing 4 massive opportunities I'm buying in the market at this very moment. I recommend you stick around for the whole video because I'm saving the best for last. Before we dive in, if you appreciate the work I do here, please consider hitting the like button and subscribing to the channel so you don't miss future content. I'm also publicizing every single trade I make, both stocks and options, in my Discord, which you can access over on Patreon. If you want to see my raw portfolio moves and learn from my mistakes while I navigate these markets, go ahead and join the community there. We would love to have you. With that out of the way, let's look at stock number 1. So the first stock we're going to talk about today is SoFi Technologies. So, Wall Street has been panicking over rate hike fears and acting like SoFi is a fragile regional bank. Meanwhile, the actual business is operating like a high-octane tech company. In Q1, they didn't just grow. They added over 1.05 million new members in a single quarter, blasting past 14.7 million total members. That's a massive 35% increase year over year, marking their 3rd straight quarter of 35% member growth. Total products hit a record 22.2 million. This opportunity and the unwarranted fear keeping the stock down will not last forever. When the macro dust clears, people will realize they missed buying a compounding fintech giant at a ridiculous discount. That is going to bring us to our second stock, which will be ServiceNow, ticker NOW. We've seen a wave of downgrades and sell sentiment hitting ServiceNow recently, with Wall Street screaming about valuation resets and still referencing the SaaS apocalypse for some ungodly reason. Analysts are terrified that generative AI and autonomous agents are going to completely disrupt traditional software licenses and kill demand for seats. Frankly, this is a perfect example of how retail investors can get rich through individual stock picking. Wall Street is completely missing the structural reality. AI isn't eating ServiceNow's lunch, it's supercharging it. Their Now Assist AI tools are seeing explosive adoption, and enterprise clients are happily paying 30% premium to upgrade to the AI-driven versions. Do I have to tell you that that isn't disruption? When you have a company that controls the core workflows for 90% of the Fortune 500 companies, that carries a 98% renewal rate, the past few months have been an absolute gift, with Wall Street selling the stock down further and further and further. Finding these exact gaps where Wall Street panics over a tech threat that is actually a growth catalyst is exactly how unreal money is made. Next up will be Celsius Holdings, ticker CELH. People are trading Celsius like the growth story is dead, but let's look at the actual math. So here's why I'm getting aggressive right now. I was loading up on Celsius in the mid to high $20 range back in 2024 before the massive gains. So that's going to be right about there. That November 22nd through February 7th, the stock was trading about 22.41, and for the beginning of that, it was about at that $28, right where we're at today. And as you can see afterward, we just kind of went straight up, all the way up to $63. So at that time, Celsius held an 11% market share, and it was just Celsius. Volatility has slammed the stock all the way back to 28, which I kind of just went over. So we are in that exact same price zone where I was buying heavily. But let's look at all of the progress they've achieved since then. They have acquired Alani Nu and fully integrated it into the PepsiCo distribution network. Not only that, they picked up the U.S. share of Rockstar. Because of these moves, Celsius is now the 6th largest beverage company in the U.S. Not just energy drink company, the largest beverage in the U.S. Number 6. Their total portfolio now commands a massive 20.9% share of the U.S. energy drink market. Yet, the core of the thesis is the exact same as it was back in December 2024. Customer retention is bulletproof, domestic growth is scaling, and the international expansion across the UK, Ireland, France, Australia, and New Zealand provide a near endless runway for growth. I'm loading up on this one as much as possible while we're in this range. We've already seen how fast the stock can move when we get a little change or boost in sentiment. Alright, so like I said, we're saving the best for last, or really what this means is this is my number one pick, and that's going to be Everpure. The ticker is P. So, like I said earlier, long-term wealth is created best when capitalizing on misunderstandings. The stock has declined since its earnings, primarily because of a short-term margin concern. But check out the 4D chess Charlie Giancarlo is playing. Everpure isn't just surviving. They are executing highly intentional, aggressive, strategic initiatives to land and expand their footprint. Management is fully aware that the recent rapid spike in memory component costs is a temporary supply chain bottleneck, but instead of pulling back or increasing prices to maintain margins, they are willingly taking lower margins on initial deals to aggressively undercut legacy players and steal market share. They are currently landing their custom direct flash modules directly into enterprise and hyperscale data centers. Short-term thinkers see a margin squeeze. I see an aggressive land grab that gives us quality data to project long-term compounding with increasing certainty. While the market complains about hardware margin fluctuations, Everpure's remaining performance obligations surged an incredible 40% year over year to $3.67 billion, providing bulletproof forward visibility. Their subscription annual recurring revenue hit $1.92 billion, which was up 16% year over year, proving that their high-margin SaaS software pivot is working. Whenever memory component prices inevitably cycle back down, Everpure's hardware margins recover immediately, but they get to keep the market share. And that's not even the best part. Once they land that hardware, the trap snaps shut and the expand phase begins. Because the secret weapon here is their proprietary Purity operating system. Their ontology, data compression and deduplication, and core data organization systems, which run seamlessly on their proprietary hardware, but can also deploy as pure software directly into public cloud, make their actual infrastructure infinitely better, faster, and more efficient than anything the competition is running. They have built an incredibly deep technological moat inside a highly resilient and essential business model. So those are my top 4 buys to capitalize on this June with all of the volatility we're seeing. While Wall Street is busy misinterpreting structural tech shifts and panic selling short-term margin noise, we're going to keep tracking the math, exploiting these institutional blind spots, and loading up on technically superior assets. If you found value in this breakdown, do me a quick favor. Please, really smash the like button. Or tap the like button, tickle it, do whatever you need to do to make it glow, and subscribe to the Night Shift. I'd also like to know, do you plan to buy any of the stocks we discussed today? I'd also really like to know what stocks are on your guys' radar this month. Don't forget, if you want to see my raw portfolio moves, my exact options plays, and the live trades I'm making through this volatility, come on over and join the Patreon community. I appreciate you watching. Stay sharp, and keep up the good work. I'll see you on the next shift.